Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of 3x leverage short semiconductors, ticker symbol SOXS. And so here I am recording this on Saturday, October 5th, after SOXS closed on Friday the 4th at a price of $20.02, being down about 4% on the day. And so, yeah, I wanted to go over the chart. I was going over, my trades and stuff for the week, getting ready for the week ahead. And the chart, actually I had a bunch of fibs on it. I cleaned them up. And yeah, this just looks really clean and crisp. So I wanted to go over it real quick with you guys over here. And so this is just looking at this wedge. And, I think there's a clear line in the sand to the downside. If we break that, I think it's going lower. But if we do hold this level, I do think that price could be going up higher to fill this gap here at 36.50. And so with that being said, there is a good amount of upside potential from current price. That's about 80% move right there. So very nice. But of course, since this is leveraged, it is pretty risky. So, do take this analysis with a grain of salt. But yeah, I do just want to give a quick shout out here. I kind of drew this inspired by a chart that was shared by Mr. Chart Norris on X, doing this with the weekly chart of ticker symbol SQQQ, which is, I believe, 3x leverage short the NASDAQ. And, I just like the SOXS better because there's more leverage with semiconductors. There's more moves, whether it's to the upside or the downside. And so I personally have been stacking this because I do think that this will be breaking out to the upside. But like I said, this line in the sand is here if I am wrong. And so going over this wedge, the bottom of it is based on the low going back to July 11th. That was the pivot low hit on that day of 17.55, and then also got the pivot low from September 26th, which was at a price of 18.25, and that is the line of the sand. If we do get a lower low, if we especially, close below 18.25, I think that could be confirming the breakdown here. So I think that's a pretty important level. And then I also do have this solid blue line here at 18.59. That was a gap that we had previously formed, but since then we have filled it since we did hit this low of 18.25. So I'm actually going to delete that gap since it has been filled. Then the top of the wedge is based on these two pivot points, the top being the high that was hit on August 5th at a price of 39.58. That is when I exited my position that I had been accumulating over the year. And then I have been starting to accumulate on the downside here. And so, that day, you might remember it, August 5th, a lot of panic, gap down in the markets over the weekend. That was a great time to be holding SOXS and taking profit. So I think this is a really great way to hedge in case things do go south in the market, whether that's for something going on in the global world stage or if there's something in the economy in the US. I think that SOXS can be a nice way to hedge for that. So I took some profits on that day. And, I was pretty proud of that. But then anyways, the other pivot point here was the high hit from September 6th. That was at a price of $30.93. And one thing, since it is October 5th right now, these dips have been happening on, effectively a monthly basis with the high here in the SOXS, so a low in the markets on August 5th, followed by this high here, but a lower high on September 6th with SOXS. And so now, we did just bounce here, forming the base of this wedge. And I think we could be seeing a breakout to the upside. And so what I would look for, I guess I need a line in the sand to the upside. I would look for a close above the high from October 1st, which was at a price of $22.43. So I got that marked right there. And so, if we do get a close next week above 22.43, that could not only be getting in a higher high than we've recently seen, getting in a higher close, that could also be the beginning of a breakout of this wedge. And that could be leading to a move up to $36.50 to fill this gap. based on the close from August 7th. So there still is that gap there that does need to be filled. And just looking at the MACD here, it has been red for a little while. It does look like it could be flipping green soon if I do zoom in here, but it does look like it's kind of getting a little bit flat. So if it does go green, if we do get a little bounce, I think it would be a little bounce, and I think that we will be retesting this uptrend at the base of the wedge before going higher. So maybe in the next week or two, I would say look for a close above 22.43, because then the next level could be 36.50. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching, and have a nice weekend. Take care, you guys.